Nice. I think you've got this asset classification thing down. There's one type of current asset I like to make sure you noticed on the balance sheet: prepaid expenses. Have you ever paid for a yearly subscription to a magazine, media streaming company, or other service because the one-time yearly price was cheaper than paying 12 monthly installments? I love my binge-worthy streaming service. Well, this happens to businesses too. Sometimes it makes financial sense to pay for an entire year's worth of insurance, rent, or a subscription up front. Like, for instance, Sophia and Summer paid rent a year in advance because they got a discount. This amount is booked as a prepaid expense under current assets. Then, as the payment is used up each month, that portion is posted to the appropriate account. For Sophia and Summer's rent example, it would be the rent expense account. I know, this is a lot. We're getting advanced here. Let's have you explore this a bit more on your own, then work through an example.
Now let's talk a little bit about prepaid expenses. So let me give you a scenario. Client is going to be paying rent for the year, $100 a month. And the landlord says, you know what, go ahead and pay me $90 a month and you get a discount. And so great, they're happy to do it. So it's going to be prepaid at the beginning of the year, and they write the check or they wire the money or they transfer it whatever way they do. Now, when they do that, there's a clause in their lease that states that if they leave after 6 months, they get refunded the rest of it. So it is not something that is 100% an expense. They really do need to allocate that to each month. And so what we want to do is record that as a prepayment. So as you can see, we have a prepaid expense account right here. This is an account that is set up as an other current asset. It is a detail type of prepaid expense. In fact, let's just open that up and you can take a look at that account and see how it is set up. It's listed as an other current asset. It is a current asset. So that means that it is going to be used within a year. So if it's current, that means it's within the next 12 months. The detail type is that it is a prepaid expense. And of course, that's the same name. This is going to show up on the balance sheet as an asset. So that amount is going to be put into that account. Then what we would do would be to set up a recurring entry to expense out 1/12 of that every single month. So as we go throughout the year, that $90 per month will be recorded onto an expense. So it would debit an expense account, and then it would credit this prepaid expense account. And so after 1 month, that amount is going to be down by $90 and the expense is going to be increased by $90. So the expense account, of course, is on your profit and loss statement, and the prepaid expense account is going to be on your balance sheet. One more little note about prepaid expenses. Sometimes you're going to see this with rent. Very often you might see this with insurance. That's another big one that can come up for clients as well. So there can be several different types. Quite honestly, a lot of small businesses tend to just expense it. So you will see that at some point throughout the year, they're chugging along, things are good, insurance has no money, and then all of a sudden you see that big $700, $800 expense. That is typically a prepaid expense where they have been billed for the annual premium. But if something happened halfway through the year and they canceled that insurance policy, switched to a different provider, you would see that they would get a refund. So when you have something like that, where it is not 100% expensed typically through, and they could typically do it throughout the year, you would want to use an asset account because in fact, they would want to allocate that. For those of you that want to know, that's something that we call the matching principle. It matches the expense to all of the months that it applies to.